The Middle East is changing again. You can feel the tension in the global markets. Oil and gold are reacting in ways we haven't seen in years. Investors are watching the charts every single hour. It isn't just about a local conflict anymore. This reaches across the entire world. Have you checked the price of gas lately? Energy costs are often the first thing to move, but gold is acting as the ultimate safety net. When things get uncertain, people look for something solid. The relationship between these two assets is shifting. Usually they move in tandem during a crisis. This time feels different. Supply lines are under immense pressure right now. Tankers are taking longer routes to avoid danger zones. That adds cost to every single barrel of crude. Think about how much oil flows through these narrow straits. One small disruption can send prices soaring. It's a fragile system that we all rely on. Gold doesn't rely on shipping lanes or refineries. It just sits there and holds its value. Central banks are buying it up in record amounts. Do they know something the rest of us don't? Fear is a powerful driver for the economy. When headlines turn dark, the money moves fast. We're seeing a massive flight to quality. Is this a temporary spike or a long-term trend? Analysts are divided on what happens next. Some say oil will hit triple digits soon. Others think demand will drop because of high prices. But the geopolitical map is being redrawn. Old alliances are being tested by these new events. You can't ignore the impact on your own wallet. Inflation was already a problem before this started. Now, energy prices might keep it high for longer. Look at how the stock market is reacting to the news. It's a roller coaster of emotions and data. Gold hit a new high just a few days ago. That tells you a lot about the current level of anxiety. People don't buy gold when they feel safe. They buy it when the future looks a bit blurry. Are we entering a new era of global instability? The signs are certainly pointing in that direction. Every headline seems to carry more weight than the last. Oil is the lifeblood of the modern world. Without it, everything grinds to a halt. But gold is the heartbeat of the financial system. It's the one thing that has survived every war in history. The balance between them is a great indicator of risk. Let's look at the numbers behind the chaos. The date is March 18th, 2026. The conflict has officially moved into a dangerous new phase. Iran's closure of the Strait of Hormuz changed everything overnight. This isn't a drill or a theoretical exercise anymore. 20% of the world's oil was just cut off. The immediate reaction in the energy market was staggering. Middle Eastern crude prices recently hit a record $153 a barrel. That's even higher than the peak we saw back in 2008. Refineries in Asia are scrambling for any supply they can find. Have you noticed the lines at your local gas station getting longer? The price of oil isn't just a number on a screen. It's a tax on every single thing you buy at the store. When transport costs go up, food prices follow close behind. This is the inflation shock that experts have been warning about. But look at what's happening with gold right now. It's currently hovering around the $5,000 per ounce mark. You'd expect it to be flying even higher, wouldn't you? Strangely, gold has been remarkably steady during this escalation. Investors are stuck in a very difficult position. The US dollar is getting stronger because of the rising interest rates. When the dollar goes up, it usually puts a lid on gold. It's a tug-of-war between safety and the strength of the currency. Is gold losing its status as the ultimate hedge? Some traders think it's become more of a speculative asset, but central banks are still quietly stacking their vaults. They remember what happened to reserves during previous wars. Physical gold is the only asset with zero counterparty risk. You don't need a functioning bank to prove you own it. In a chaotic oil crisis scenario, that becomes vital. The Strait of Hormuz is essentially the world's jugular vein. If it stays closed, the global economy could bleed out. Ship owners and insurers are now walking away from the region. Insurance premiums for tankers have reached astronomical levels. Some vessels are just anchoring outside the strait, waiting. They're hoping for a diplomatic breakthrough that hasn't come. Honestly, the tension is thicker than it's been in decades. Do you trust the current system to stay stable? Most people are looking for a way to protect their savings. Oil is the trade for those who want to profit from the chaos. Gold is the trade for those who want to survive it. There's a massive difference between those two mindsets. One is about greed, the other is about preservation. The gold to oil ratio is giving us a strange signal. It's showing that protection is still at a massive premium. Even with $150 oil, investors aren't letting go of their gold. They're waiting for the next shoe to drop in this conflict. If missile strikes continue, the supply chain could snap. We aren't just talking about gas and diesel anymore. Fertilizers and chemicals are also stuck in those shipping lanes. This conflict is rewriting the rules of the global market. This conflict isn't just about a spike in numbers. It's a massive geoeconomic firestorm. On March 18th, 2026, the world is holding its breath. The latest reports show Brent crude has crossed the $100 mark again. Some markets saw it peak near 120 earlier this month. That volatility is making it impossible for businesses to plan ahead. Have you seen the recent headlines from the Strait of Hormuz? Retaliatory strikes are hitting tankers and infrastructure almost daily. Iran recently confirmed the loss of its top security chief, Ali Larijani. In response, they've vowed a decisive retaliation against their enemies. The United Kingdom's Maritime Agency is reporting new projectile hits on vessels. Traffic through the world's most vital oil artery has virtually paralyzed. Shipping giant Maersk has even suspended empty container returns in the region. Ports from Kuwait to Bahrain are essentially cut off from the global grid. This isn't just a local problem for the Middle East anymore. It's a structural shock that is reshaping every supply chain we know. Take a look at the gold to oil ratio right now. Gold is struggling to stay above the $5,000 level today. It actually slipped to around $4,800 in some morning trading sessions. That's a strange move considering the chaos in the Gulf. Usually, gold should be skyrocketing while oil burns, but the US dollar is acting as a massive vacuum for global capital. Investors are fleeing to the dollar because it feels like the only safe harbor left. This creates a bizarre environment where both oil and the dollar rise together. When that happens, gold often gets squeezed in the middle. Are we seeing the end of gold's reign as the ultimate crisis hedge? Or is this just the quiet before an even bigger storm? The International Energy Agency is releasing 400 million barrels of oil. They're trying to prevent a total global economic collapse, but even a release that large is just a temporary band-aid. It doesn't fix the fact that 20% of global supply is trapped. Food prices are the next thing everyone is worried about. Fertilizer shipments are blocked along with the crude oil tankers. If farmers can't get what they need, the grocery store will get even pricier. Do you feel like your paycheck is shrinking every single week? It's because energy is embedded in everything we touch. From the plastic in your phone to the bread on your table, the new Middle East conflict has changed the math of everyday life. It's no longer about a potential risk in a far-off land. It's a reality that is sitting right at your local gas pump. Analysts are now predicting oil could hit $124 by the end of March. If that happens, the pressure on the global financial system will be immense. Gold might finally break its chains and surge past its current resistance, or it might continue to struggle against a surging US dollar. It's a high-stakes game of chicken between the world's biggest powers. But unfortunately, the average person is the one caught in the crossfire. Stay focused on the charts, because things are moving faster than ever. The rules of the game are being rewritten in real time. One wrong move in the strait could trigger a total market reset. Are you prepared for what comes after the next escalation? The date is March 18th, 2026, and the data is finally in. Brent crude is officially trading at $100.86. That's a jump of over 2% in a single day. WTI isn't far behind, sitting at $93.83. These aren't just abstract numbers anymore. They are the result of new Iranian attacks on the UAE. The conflict has entered its third week with no end in sight. Have you seen how the UAE markets are reacting? Every explosion near a refinery sends a shockwave through the exchange. The Strait of Hormuz is the epicenter of this global crisis. Even though some tankers are moving, they're moving slowly. It's a selective closure that favors certain nations over others. Iran is reportedly letting friendly ships through the corridor. If you aren't on that list, your cargo is essentially stranded. Western allies are hesitant to join a new naval escort mission. President Trump has expressed disappointment in NATO's response. He says the U.S. is prepared to go it alone if necessary. This political friction is making investors very nervous. Look at gold, which is struggling to hold the $5,000 mark. It's currently hovering around $4,190 per ounce. Why isn't it surging higher during a literal war? The US dollar is at a multi-year high, acting as a competitor. When the dollar is this strong, gold faces a massive uphill battle. Speculators are also liquidating positions to cover losses elsewhere. It's a classic liquidity squeeze in the middle of a conflict. But don't let the short-term dip fool you. The structural reasons for owning gold are stronger than ever. Inflation in the US was 2.4% before the fighting started. Analysts now expect it to hit 3.5% if oil stays at $100. If oil reaches $150, we could see inflation jump to over 5%. That would mean $6 gasoline at the pump for every American. Are you ready for the cost of living to reset at a higher level? The security umbrella that protected global trade is cracking. We are moving toward a world of modern mercantilism. Nations are prioritizing their own supplies over global stability. South Korea is already bypassing the strait to get oil from the UAE. They're finding alternative channels that didn't exist a month ago. Every country is scrambling to secure its own future. This conflict is a wake-up call for the entire planet. It shows how fragile our just-in-time economy really is. One missile in the wrong place can change everything. Gold remains the only asset that doesn't require a headline to be valuable. Oil remains the only asset that makes the modern world move. The tension between them defines our current era. So will we see a de-escalation by the end of the month, or is this the beginning of a much longer struggle? The markets are betting on a volatile spring and a difficult summer. Keep your eyes on the strait and your hands on your assets. The world of 2026 is proving to be more unpredictable than we imagined. This is just the beginning of the new global math.